All right, guys, Carlton Flowers here, the Crypto Pro, with a special video. We're going to talk about the market overall, and then I am going to call out certain people on YouTube who tend to pump and make ridiculous predictions that don't come to pass. But we're going to look at the overall and try to make sense of what's going on and discuss things that most of the ridiculous prognosticators do not consider. So hopefully you can learn something new and get some basic information, which is what you will need. So first of all, let's just look at what's going on overall in the market on Coinbase. So Bitcoin is currently at 10,335. Doing this little sideways consolidation within this big triangle thingy that we'll look at a little bit closer. Ethereum at 179, Litecoin kind of fooling around below 70 still. Bitcoin Cash, which I really don't know what the use for Bitcoin Cash will ever be, but people seem to still believe in it. XRP is doing some interesting things, sitting at a quarter. Stellar Lumens down just a little bit at 5.7 cents. Basic Attention Token, been watching that for quite a while. 17 cents. Ethereum Classic kind of hanging around. That's another one that is just sitting there in that gray area of what is the use of this coin. A lot of these altcoins, we just don't know if they're going to survive. Zcash, $44.37. EOS has been talked about lately, sitting at $3.73, and there's word of a possible breakout. We'll talk about that more and look at the chart. Chainlink, $1.67, getting dumped just a little bit. Cardano, ADA, at 4.5 cents. That's one that has just been sitting and piddling around. Tron at 1.5 cents. I tell you, Tron has been quite a disappointment. It is one that I used to hold and don't hold any longer. We'll talk a little bit more about that too. Gosh, look at all these coins. A lot of these that I used to hold that I don't anymore because I exited from all of my altcoins that I held on Binance. When Binance made the move to get rid of all of the US traders because of the regulations that changed, forcing us to divest our holdings. All right, there's my music again. KenCoin continuing to trade, $9.7 million of volume. I don't know why. Why are people investing in that? It must just be for the possibility of a long shot. It's a Vegas long shot. NEO at $8.98. It has always intrigued me. Bitcoin Diamond at 60 cents. That's the generic Bitcoin with a fancy name. I've had my eye on it all year. Dent is something else that I've been reporting on a lot. One of the few crap coins that has an actual use case with 32 million volume. Look at that volume. Should I even scroll through the rest of this? No. Electroneum with 34 million volume at 0.0035. That's another one that I just don't get. They might have a somewhat good use case. So we'll just scroll down here and look at some of the volumes. Verge, why? $67 million of trading volume at 0.004. That's one of the biggest, most no credibility having coins that I've ever followed. I had held Verge back in 2017, and then they made the big announcement that they were moving into the pornography area, and that's the minute they said that, I was like, goodbye. Not going to hold my money in that one. All right, so scrolling on down, KuCoin shares sitting at 157 million volume. Wow. Let's see, anything else interesting? This new one, INO coin. Look at the volume on this, 362 million, sitting at $2. I don't know what's up with that, but it's interesting. I'm going to keep my eyes on it. USD coin at 433 million volume. This is an interesting one because Coinbase decided to get out of Tether, USDT, Tether the scam, and they flipped to USDC, primarily because we don't know what in the world Tether is doing, where they claim to have a 1-to-1 backing for every Tether token of $1 USD. until we caught them in the scam of printing Tether without having the backing. And the way they did that was by assuming that when people sell off their Bitcoin and hold it into Tether, that they weren't going to cash it out to their bank account, but wait for Bitcoin to flip and switch to a higher price, or use that Tether to buy another altcoin. So because of Tether scamming us all and Bitfinex using Tether to snatch up, gobble up more Bitcoin by not backing the Tether tokens. In other words, let's print 10 million Tether tokens when we only actually have, say, 1 million USD to back that up, because we know people aren't going to cash out. So it's an arbitrage. But that's why Coinbase got away from using and backing Tether. All right. Now, this is my little $16. I have a certain amount in Coinbase, and I use this amount just to look and see what's going on with the market at a glance. I've got most of my money in Coinbase Pro. When you're trading on Coinbase Pro, you don't get the high fees, like $2.99 just to buy 10 bucks worth of Bitcoin, which is ridiculous. When you trade on Coinbase Pro, which you get for free when you have a Coinbase account, the fees are much, much less, like maybe say 10 or 15, 20 cents as opposed to $2.99. So if you have a Coinbase account, it's an on-ramp, but don't use it for trading. If you're going to sit and hold, that's fine, but don't trade using Coinbase when you don't have a lot to trade with. Let's jump over to BTC and look at the big blue line. It's important to look at this big blue line to get an idea of what's going on in the overall market. Let's draw on this chart. Right now, there's tons of people that claim that Bitcoin is going to massively break out of this ascending triangle formation. Well, first of all, it's not an ascending triangle. To me, it's a descending triangle. The difference is here. Let me just draw on the screen here. We've got a base right here, and then we have the descending top right there. This is what you call a descending triangle because the base is flat. Now, some people claim that the bottom is slightly moving up. They like to draw it like this, and that makes a pennant. So whenever you have a pennant with an ascending base, sometimes people think that it's going to break this way. But here's the thing. Whenever you're in a bear market, your breakout on a parallel triangle or a flag, it usually goes to the downside. Whenever you have an ascending triangle, and let me show you what that would look like. If you have a base that is moving up, and then you also have a top that, let's say this top was flat like this, this would be an ascending triangle. And when we have that formation, it usually breaks to the top side. But since we don't know if we're in a bull market or a bear market, we don't know which way this is going to break. So most folks think that we're in a bull market. I don't think we are. Now, when you consider where we were down here at this consolidation base, you might think, oh yeah, we're in a bear market. Look at this breakout. And this is just a consolidation that's occurring and making this great big bull flag. And then as soon as that bull flag is done, we're going to explode there. Let's zoom out and see what this looks like in the overall. Let's turn drawing off, and then we are going to look at the big picture. Now, here is the tremendous bull market, the bull run from 2017 when we consolidated and hit this peak at almost $20,000. And then we entered into the definite bear market where we have this activity. And whenever we corrected, we would correct back down to the same overall base. And so we had a baseline like this. This is what you call a descending triangle. What happened at the end of it? Yeah, we went down. Now, considering that we already hit this peak here before, looking at what we have now in this smaller formation, this is nothing compared to the big one. Now, if this was a true bull market, which it's not, we would be far above. Now, what we're doing right here, we're repeating the same pattern. Look at this big pattern and look at this one. It's a microcosm of the previous, bull run. So now we notice that we had that same rise. Whoops. Let's go to our line drawing here. We have the same rise, and then we have this correction activity. And then the argument is this a bull flag or is it a bear flag? I contend that we have a same pattern forming where there is a flat bottom base, just like we had with this one. So if this was a true bull market, in my opinion, we would be trading somewhere up here, but we're not. We're trading down within this big circle that is far less than what we had before. When you look at the overall history of the market, the major movements move up. Let's see if we can zoom out even further. And here we go. This is why the blue line tells the truth on things. So let's draw on this. First major bull run here and correction. And so the next major bull run, it's going to be far and above this. Way far and above what we have here. We should be on an ascent like this. And I think that the next true bull run, it's not going to be confined within the previous peak that we had right here. We're way down below that. The next bull run is probably going to take us in the area of 150,000. That's why you cannot call this a bull market. I don't believe it. Some people can call it a bull market. I'm not going to fall for that. So until we break this base, you cannot call this an overall bull market. That's why I think this consolidation is not done. All right, so let's zoom back out or zoom back in just a little bit. What could happen if history repeats itself? Once we finish this base here, there's a good chance that we go back down, and then we'll start a new consolidation, and then the next major move is going to come out of that. All right. So whenever we eclipse this current little area, then we can call ourselves in a bull market because markets don't go backwards. This is a bear trend that extends from way back here. Overall, this is the direction that we're going. And when you look at the moving averages, which what we'll do when we jump on this next chart, you're going to see that. So let's jump over to the actual chart with all of the information. Ignore all these circles here. Those are fib circles that I have that let us know when we get to critical pivot points. Let's jump to the 1 day. All right. Now, this is on a logarithmic scale, and we can see a lot more clearly that this was the major bull run here. Bull market, bull market, bull market. And then we start bear market here, bear market, capitulation, and now we're just kind of slightly recovering here, and we are not breaking out of this area, this zone that we're in. We're far below that. Here we are right here consolidating, and we have folks calling that a bull run. No, that's not. So until I see us move out of this area, we would have to assume that this is a continuation of a correction, and we're probably going to trend downward. All right, let's clear all that out and see if we can zoom in and look at the moving averages. So where's my moving average lines? Here they are. So with this moving average, look how much it pulled up during the bull run, and here we are somewhere around this area. We have returned, pulling it back up to about this same level after we had that massive run. If this was a real bull market, this moving average line would be far above where we were before. That's why I look for two things to happen. Number one, a return to where that moving average line is before we hit the next descent. Or number two, we go below it. Some people think that the moving average line is going to be the base. Here's what you need to consider. The moving average is printed from the history. It's not predicting things from the future. So in other words, if we start to trade below this moving average, it's going to pull it down. So let's just draw a little line here. If we go below that, this moving average will start to do this. It doesn't mean that it's automatically assumed that the moving average is the absolute base. It isn't. Let's look at points in the past where we traded before it. Here's where we had the golden cross in the bear market. And look at this area. We're trading below the moving average this entire time, way below the moving average. So if the moving average has to be an absolute base, why did we trade up until this point below that line? It means that it is possible for it to happen. Now, when we look at the 200-day as opposed to the 50-day, it looks like the 50-day is starting to come down. And if we get to the point where those two lines cross, we have a golden cross. So let's draw on here and tell you kind of what that means, what it looks like. So here's our 50-day. It can come down. If the 50-day comes down and meets this point, we're trading down below that, we could get a cross. And then if we're trading below the 200-day average, oh man, I tell you what, it could continue for quite some time until we hit the completion of this correction, and then we start our ascent upward. So that's kind of what lets me know that when people get all excited saying, oh, we're on the verge of breaking out, and by December we could hit 16,000. So if we hit 16,000 and reach this point, why is that news when we were at 20,000 before? That's not news. News to me is when we break 100,000. That's what I'm looking for. Overall, I'm not a bear on Bitcoin. I believe in the future, and I do believe that one day it will trade at $1 million. When we run out of the circulating supply, when mining is finished and there is a shortage, demand is going to be huge, and we do have the chance of popping over that magical $1 million amount. All right, so let's zoom in and look at the 4-hour chart. And this is going to give us some more clues as to what's going on. Notice that I have a parallel trading channel that I have indicated here. Here's this parallel trading channel that we have stayed within. And then notice I have another smaller parallel trading channel that is above that. I didn't change this original one, and here's the reason why. We popped above it in this area here, and then we popped above it again in this area here. In fact, we even went above this smaller parallel trading channel. But notice how we had a rejection at the top of this smaller channel here. So it looks to me like what's going to happen, we'll continue trading until we get close to this next magical fib circle boundary. Now, why do I call it magical? Let me tell you why. When we put a fib circle analysis in that is based on critical points of a swing channel, like here's a high point here, here's a low point there, and that is what this blue fib circle set is based on. We see that certain things happen along those boundary lines. In other words, we pivoted right here. We pivoted again right here. We found this point, we crawled right up this channel and moved out, and guess what? We pivoted again right here. So once we come down off the top of this trading channel, we're headed towards this line, we know that something's going to happen. We're either going to capitulate and go down, or we're going to break out to the positive. I think it's going to break down, and the reason is I believe this sloppy chart represents a descending triangle. Why did I do that in green? I don't know. So when we look at other indicators like the stochastic here, we have just pivoted here at this point. The stochastic is way overbought. We're over the 80% line. So that tells us there's going to be some momentum that takes us back down to this boundary of the upper part of the parallel trading channel. My eyes will be on what happens right here and what happens when we hit this boundary. So after that, we'll have to look at some more evidence of what's up ahead. Now, when we zoom out, we're going to have to go back to the 1 day so we can see this next big fib circle boundary, which is this line right here. And I believe that is the 1.618. Yes, or 2.618 right here. Getting to this line is going to provide us more key evidence. What I think could happen, this is a possibility, if we capitulate here, we're going to try to find this line. I believe this will be the turning point from the bear market to the bull market. And when we come out of this, if we start to crawl up, we're going to look for this next line. And then there could be a pivot here to the upside or the downside. We'll find the next line. This is where the big move is going to be. When we hit here, we could start looking for that $100,000 to $150,000 range. All right, so let's zoom back in and look at the 1 hour and see if we have some evidence there of what's going on. Zooming in, and let's expand this line so we get a little bit better of an idea of this trading action. Now we can see that the momentum coming down after touching on the top of this parallel trading boundary here, we get a little bit more of an idea. It looks like that momentum is definitely downward. And then we see that our 200-day EMA and our 50-day EMA is at a crossing point. So that might also drag this line down and tell us that we're probably going to come upon that fib circle boundary at the top of this trading channel boundary. Okay, so let's look at a couple of other charts in the alts that are interesting to me, one of which is EOS. EOS is in the news, and people are saying that it is about to experience a technical breakout. Let's see why and see if there's any evidence supporting this. So starting with the 1 day, so we can look at the action overall. Here was that big peak way back when at $15, and then we had the big capitulation, a rise, and a decline. Notice that we are coming up on a fib circle boundary here, and it looks like the 3.618 line, we're crossing it. And if we right now we've run through that line, if we were to break to the positive side, it's got to happen very, very soon. If we don't see that happen, we're going to run to this next line, and it's going to be a negative descent where we could possibly wait until we hit this baseline. So if we don't move up real soon within the next day right here, then it's looking like it's going to be the decline, and we're going to wait until we hit this next boundary, and then it could move up. I won't be convinced until we see that happen. The reason why I don't think it's ready to break right now is because of this. Look at the crossover between the fast and the slow stochastic line right there. The momentum is downward. Now we're back below the 80% point on the stochastic, so the momentum is definitely downward. So we'll have to wait and see what happens when we get closer to the next magical fib circle boundary, which is the 4.326 line. Now, again, the reason why we call it magical is because we look for evidence of key points where pivots happened in the past. It doesn't happen on every one. We ran straight through at this point, no pivot. But then we did have a pivot here at this point. We had a pivot here at this point. We ran up to this line and then kind of sort of crawled up the line, and then we had our descent. There's a definite drop at this line, a definite drop at this line. We ran through this one pretty big, and then we hit this point where we side banded until we got to the 2.618. Nothing exciting there. And if we poke through this one, I'm looking for the next pivot point to be right here. So this could happen, or it could be like that. We'll wait and see. But from technical analysis, purely technical analysis, it is possible that these people could be right based upon these fib circle boundaries. So we'll keep an eye on that. I am going to end this now. I'll probably have to make another video on XRP because this one's getting a little bit long, but let's just jump to the XRP chart and show you the non-action that's going on. And I'll give you a sneak preview of what I will talk about on the XRP analysis. So let's jump to the 1 day. Oh, we're on the 1 day. Let's just zoom in here and show you that we have overall a big base that is happening. This is what we'll discuss. We're going to discuss the two possibilities of a base for XRP. This is the first one, and then this is the second one. I think if we violate this first one, we're going to move down to the 22 cents level. And I don't see us going below that. So we're going to zoom in and talk about when the possible XRP breakout could happen based on technical analysis alone. And we'll talk about the magic of this red fib circle boundary and the 4.236 and the 4.618 that is coming up. So we'll end that here. Hopefully you learned a couple of things on this video, but I want you to ask any questions that you might have, and I'll answer them in the next video. And if you want me to look at the technicals on any one of your favorite alts, let me know what they are, and I'll be glad to post a video just to answer your question. So that's all I've got for now. This is Carlton Flowers, the Crypto Pro, bringing you the analysis from an unbiased standpoint. Definitely not a moon boy, but I'm definitely not a perma bear either. I just look at this from a realistic standpoint so people can trade safely and not jump in the market at instances like this or like this. This is where I FOMO'd in right here at the last time, where I'm holding a bag of XRP at 45 cents because I got caught up in the hype. But now it's a point where I might double down right here and add to my bag. So that's what I want to help people do, help new investors make good decisions. This is definitely not financial advice. I'm not a financial advisor, but just here calling the shots and providing the commentary like John Madden on Monday Night Football with the magical fib circle lines. We'll see you next time. And until then, be safe, be careful. This is Carlton, and I'm out.